In your lecture on the basics of finance and investing, you mentioned a book, Intelligent Investor by Benjamin Graham, as being formative in your life. What key lesson do you take away from that book that informs your own investing?
Sure. Actually, it was the first investment book I read. And as such, it was kind of the inspiration for my career and a lot of my life. So important book. Bear in mind, this is sort of after the Great Depression. People lost confidence in investing in markets, World War II. And then he writes this book. It's for like the average man. And basically he says that you have to understand the difference between price and value, right? Price is what you pay. Value is what you get. And he said the stock market is here to serve you, right? And it's a bit like the neighbor that comes by every day and makes you an offer for your house. Makes you a stupid offer, you ignore it. Makes you a great offer, you can take it. And that's the stock market. And the key is to figure out what something's worth. And you have to kind of weigh it. He talked about the difference between, he said the stock market in the short term is a voting machine. It represents speculative interests, supply and demand of people in the short term. But in the long term, the stock market's a weighing machine, much more accurate. It's going to tell you what something's worth. And so if you can divine what something's worth, then you can really take advantage of the market because it's really here to help you. And that's kind of the message of the book.
In that same way, there's a kind of difference between speculation and investing.
Yeah. Speculation is it's a bit like trading crypto, right?
Strong words.
Well, short-term trading crypto. Maybe in the long run, there's intrinsic value. But it's many investors, in a bubble going into the crash, were really just pure speculators. They didn't know what things were worth. They just knew they were going up, right? That's speculation. And investing is, doing your homework, digging down, understanding a business, understanding the competitive dynamics of an industry, understanding what management's going to do, understanding what price you're going to pay. The value of anything, I would say, other than love, let's say, is the present value of the cash you can take out of it over its life. Now, some people think about love that way, but it's not the right way to think about love. But it's, so investing is about basically building a model of what this business is going to produce over its lifetime.
So how do you get to that? This idea of called value investing. How do you get to the value of a thing? Even like philosophically, value of anything really, but we can just talk about the things that are on the stock market.
Sure.
Companies.
The value of a security, the value is the present value of the cash you can take out of it over its life. So if you think about a bond, pays a 5% coupon interest rate. You get that, let's say every year or twice a year, split in half. And it's very predictable. And if it's a U.S. government bond, you're going to get it. So that's a pretty easy thing to value. A stock is an interest in a business. It's like owning a piece of a company. And a business, a profitable one, is like a bond in that it generates these coupons or these earnings or cash flow, every year. The difference with a stock and a bond is that the bond, it's a contract. You know what you're going to get as long as they don't go bankrupt and default. With a stock, you have to make predictions about the business. How many widgets are going to sell this year? How many are going to sell next year? What are their costs going to be? How much of the money that they generate do they need to reinvest in the business to keep the business going? And that's more complicated. But what we do is we try to find businesses where, with a very high degree of confidence, we know what those cash flows are going to be for a very long time. And there are very few businesses that you can have a really high degree of certainty about. And as a result, many investments are speculations because it's really very difficult to predict the future. So what we do for a living, what I do for a living, is find those rare companies that you can kind of predict what they're going to look like over a very long period of time.
So what are the factors that indicate that a company is going to be something that's going to make a lot of money, it's going to have a lot of value, and it's going to be reliable over a long period of time? And what is your process of figuring out whether a company is or isn't that?
So every consumer has a view on different brands and different companies. And, what we look for are sort of these non-disruptible businesses, a business where you can kind of close your eyes, stock market shuts for a decade, and that 10 years from now, it's going to be a more valuable, more profitable company. So we own a business called Universal Music Group. It's in the business of helping artists become global artists sort of the recorded music business, and it's in the business of owning rights to sort of the music publishing rights of songwriters. And I think music is forever, right? Music is a many thousand-year-old part of the human experience, and I think it will be thousands of years from now. And so that's a pretty good backdrop to invest in a company. And the company basically owns a third of the global recorded music. That's the most dominant sort of market share in the business. They're the best at taking an artist who's 18 years old, who's got a great voice, and has started to get a presence on YouTube and Instagram, and helping that artist become a superstar. And that's a unique talent, and the result is the best artists in the world want to come work for them. But they also have this incredible library of, the Beatles, the Rolling Stones, U2, etc. So, and then if you think about what music has become, it used to be about records and CDs and 8-track tapes for those of whom, and it was about a new format, and that's how they drive sales. And it's become a business which is like the podcast business, about streaming. And streaming is a lot more predictable than selling records, right? You can sort of say, okay, how many people have smartphones? How many people are going to have smartphones next year? There's a kind of global penetration over time of smartphones. You pay, call it $10, $11 a month for a subscription, or less for a family plan. And you can kind of build a model of what the world looks like and predict, the growth of the streaming business. You predict what kind of market share Universal is going to have over time. And you can't get to a precise view of value. You can get to an approximation. And the key is to buy at a price that represents a big discount to that approximation. And that gets back to Ben Graham. Ben Graham was about what he invented this concept of margin of safety, right? You want to buy a company at a price that if you're wrong about what you think it's worth, and it turns out to be worth 30% less, you paid a deep enough discount to your estimate that you're still okay. It's about investing. A big part of investing is not losing money. If you can avoid losing money and then have a few great hits, you can do very, very well over time.
Well, music is interesting because, yes, music's been around for a very long time, but the way to make money from music has been evolving. Like you mentioned, streaming, there's a big transition initiated by, I guess, Napster, then created Spotify, of how you make money on music with Apple and with all of this. And the question is, how well are companies like UMG able to adjust to such transformations? One, I could ask you about the future, which is artificial intelligence being able to generate music, for example.
Sure.
Which there have been a lot of amazing advancements with. So do you have to also think about that? Like when you close your eyes, all the things you think about, are you imagining the possible ways that the future is completely different from the present, and how well this company will be able to like surf the wave of that?
Sure. And they've had to surf a lot of waves. And actually the music business peaked the last time in like the late 90s or 2000 timeframe. And then really innovation, Napster, digitization of music almost killed the industry. And Universal really led an effort to save the industry and actually made an early deal with Spotify that enabled the industry to really recover. And so by virtue of their market position and their credibility and their willingness to kind of adopt new technologies, they've kept their position. Now, they, of course, had this huge advantage because I think the Beatles are forever. I think U2 is forever. I think the Rolling Stones are forever. So they had a nice base of assets that were important and I think will forever be. And forever is a long time. But, again, there are all kinds of risks in every business. This is one that I think has a very high degree of persistence. And I can't envision a world where beyond streaming, in a sense. Now, you may have a Neuralink chip in your head that instead of a phone, but the music is going to come in a digitized, kind of format. You're going to want to have an infinite library that you can walk around in your pocket or in your brain. It's not going to matter that much if the form factor, the device changes. It's not really that important whether it's Spotify or Apple or Amazon that are the so-called DSPs or the providers. I think the value is really going to reside in the content owners, and that's really the artists and the label.
And I actually think AI is not going to be the primary creator of music. I think we're going to actually face the reality that it's not that music has been around for thousands of years, but musicians and music has been around. Like, we actually care to know who's the musician that created it, just like we want to know that who's the artist, human artist that created a piece of art.
I totally agree. And I think if you think about it, there's lots of other technologies and computers that have been used to generate music over time. But no one falls in love with a computer generated track, right? And Taylor Swift, incredible music, but it's also about the artist and her story and her physical presence and the live experience. I don't think you're going to sit there and someone's going to put a computer up on stage and it's going to play and people are going to get excited around it. So I think AI is really going to be a tool to make artists better artists. I think like a synthesizer, right? Really created the opportunity for one man to have an orchestra. Maybe a bit of a threat to a percussionist, but maybe not. Maybe it drove even more demand for the live experience.
Unless that computer has human-like sentience, which I believe is a real possibility, but then it's really, from a business perspective, no different than a human. If it has an identity that's basically fame and an influence, and there'd be a robot Taylor Swift, and it doesn't really matter.
It's a copyrightable asset, I would think. Right? Yeah.
And then there'll be...
Not sure that's the world I'm excited about.
Well, that's a different discussion.
So,
the world is not going to ask your permission to become what it's becoming. So, but you can still make money on it. Presumably there'd be a capital system, and there'd be some laws under which I believe AI systems will have rights that are akin to human rights, and we're going to have to contend with what that means.
Well, there's sort of name and likeness rights,
yes,
right, that have to be protected. Now, can a name be attributed to a Tesla robot? I don't know.
I think so. I think it's quite obvious to me.
So those are more potential artists for us to represent at university.
Exactly. All right.
That's sort of one example. Another example could be just the restaurant industry, right? If you look at businesses like a McDonald's, right? It's the company's like a 1950 vintage business, and here we are. It's 75 years later, and you can kind of predict what it's going to look like over time, and the menu's going to adjust over time to consumer tastes. But I think the hamburger and fries is probably forever.
The Beatles, the Rolling Stones, the hamburger and fries are forever.